Oh boy, this video is gonna piss a lot of people off, but it's a video that needs to be made and it's a video that needs to be said, because quite frankly, the failure rates in this industry are high enough. This skill of trading is difficult and hard enough. And so many people just don't ever get a chance to get off on the right foot because they are dragged under into this whole 1 minute nonsense, super low time frames, super high frequency of trading, and it simply just doesn't work. Now, before you jump to the comments and write something based on emotion and reactivity, which doesn't make good traders, as you know, hear me out with this video. It's going to be backed by evidence, backed by factual reports, systemic reviews, journals that have come out, proper data and proper evidence. So this is not just me crapping on the 1 minute, although you can probably guess how I feel about them already based on the title of this video, but it's going to help you guys understand actually why in the long term this might not be the best play for you. Because it's all well and good if you trade the 1 minute, you having 3 months of success, 6 months, 12 months. That's very short term. Trading is about playing the infinite game. It's not about being profitable over a year. It's about being profitable over 5 years, 10 years, 15 years. Longevity, a skill that will continue to pay you bloody healthily for life. And the 1 minute time frame isn't it. And that's what we're going to go through in today's video. So buckle up and listen up. So first of all, just a couple of pet peeves before I get into the actual data. I've been around now for over 11 years trading, and I never had this YouTube until I was over 9 years of professional retail trading. The reason for that is so I could have all the evidence, all the verified results, build a really good amount of personal capital before then coming online and being in an appropriate position to then educate the right way. There's too many people out here who've been trading 3, 4, 5 years who think they can educate, and unfortunately it's just the blind leading the blind. And the common factor with that is the 1 minute time frame. Now, I've been around the block a lot. I call every trade live, as all of you will know who are regular viewers of the channel. Everything time-stamped. I don't just do it over a few months, I've done it over years and years now, so you can see what true professional retail trading looks like. And it's super transparent. So looking in, when you look at the data coming out of institutions, coming out of prop firms, obviously prop firms are massive in the space at the moment and have been for the last few years and will continue to be, I imagine, for the coming years to come. The data coming out of those we're going to go on to later today in today's video. But there is no coincidence. The failure rate's so high anyway. When you have a scroll on YouTube, on this platform, you have a scroll on Instagram, as high as I would say 90-95% of things you see about trading is 1 minute time frames, trading view replay mode, no proof of actual transparent results, just saying I made X amount in 2 minutes or I made X amount in 10 minutes, copy my strategy, comment this for this. It's a load of BS. There's no transparency to it at all. But any newbie trader watching that is going to think, oh my God, look how quick, look how easy. And it plays to that dopamine. And we know as professional traders, we don't want to be excited. We also obviously don't want to be down in the dumps. We want to be incredibly neutral and level-headed. And there's a reason that people want you to trade the 1 minute time frame online, because you sign up for free through their affiliate broker link. And the more you trade, the higher the frequency, the more they get paid and the more the broker gets paid. The 1 minute time frame is just a profiteering time frame for brokers, for your favorite fake fraudulent influencers. You've got to stay away from it. There is no longevity in it. And it's a really pet peeve of mine. I try and stay off social media anyway, but every time I'm on it, you can't avoid it. It's right in front of your face. Let me ask you this. Why do you think hedge funds, financial institutions, why do you think they spend hundreds of millions on quants, the tech, algos to trade these small timeframes and to take advantage of those small price gaps? Why do you think they do that? They don't put it down to humans because there's so much noise, there is so much data stimulus to process, and it's forever changing all the time. Go, 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 go. Every tick, every pip, it's forever changing. And if a human is doing that, it leads to a huge amount of decision fatigue. You've got so much stimulus coming into you where you immediately think it's this bias, and you think it's this, and then that's changed, and then that's shifted, and da-da-da-da-da-da-da. And you completely get caught up in it and get lost within actually what's going on in the higher time frames and actually trading with the trend. Another thing as well is so many 1 minute time frame traders, your frequency of trading is massive. You could be taking 2-3 trades a day. And you're probably, so a lot of you are listening to that and going, what's wrong with that? And I say, if you're taking even 2 trades a day, and then that's your cutoff, 2 trades a day is still 10 trades a week, theoretically, okay? That's 40 trades, if not a little bit more, over a month, if it's 4.5 weeks on average in a month. That is a huge trade frequency. When I look at my trade frequency, my best months, my highest performing percentage gain months, is when I have taken the fewest number of trades. Trading and professional retail trading is very much a game of quality over quantity, okay? And the beauty of higher time frames, that you don't get any of this on the 1 minute. The beauty of higher time frames is that there's so much better clarity. There's such cleaner price, cleaner structure, whatever you trade. I'm not saying you need to trade a certain way, but what I am saying is that you need to zoom out and trade higher time frames. I don't care about your particular strategy. There's many strategies that work, but the 1 minute is noise, it is chaos, and quite frankly, it will just, whether it's now, whether it's in a month, whether it's in 6 months, whether it's in a year, after you spend all that time trying to make the 1 minute time frame work and getting mixed results, it will blow up in your face at some point, and it will not be good. And eventually you'll look back on this and go, I need to try higher time frames. You do. So on the screen now, you're going to see quite a few articles that have gone into systemic reviews, that have collected the data, have looked at the mathematical data and outcomes that comes out of institutions, that comes out of prop firms. Prop firms, for all of you watching this, are something every single one of you has probably dabbled in, or you're probably trading on right now, okay? The data does not lie. And this is, again, not me trying to say you've got to do this, you've got to do this. But bloody hell, don't be so ignorant and think that the 1 minute is still going to be your best friend, because the data coming out of these institutions doesn't support it, okay? It does not support it. The only thing 1 minute time frame trading, as I said earlier, supports is the brokerage's pockets, basically, with all those fees, all those commissions. You think, again, if you're trading that higher frequency that a lot of you 1 minute traders do, all that slippage of fees, all the costs. And even if you're trading a raw spread account, as anybody should be, whether you're lower time frame or higher time frame, raw spread accounts obviously come with little charges, little fees every trade you open, which is fine because it gives you the price you want. That's the beauty of a raw spread account. But if your trade frequency is through the roof and you're trading the 1 minute, those fees add up. And although you think you might have had a profitable month or a profitable week, when you add up all those fees, how much has it actually chipped into your percentage gain at the end of the month? Okay, are you even break even? Would you have been profitable, but the fees have brought you to break even or into a losing month? You have to factor these things in, because it all feeds into, at the end of the day, positive expectancy. Win rate will fluctuate, whether you're higher time frames, lower time frames, it will fluctuate. I do not care what you will say. Your win rate will not be the same every month. Now, although lower time frame traders, 1 minute traders will argue their win rate will be higher, you are still susceptible to losing streaks. And when you do have those losing streaks, they will erode into your edge a lot heavier, okay? And then typically, because you're trading a 1-to-1 on the lower time frames a lot of the time, again, when you go into a losing streak, there's a huge amount of heavy lifting that needs to be done to get you out of said losing streak, okay? But that is for a different video. I've done another video on asymmetric risk to reward already. So the data coming out of these institutions does not lie, okay? We know the failure rates are hard enough in trading, okay? Before we go into what type of trading, what type of asset class, it's a really difficult skill, as you all know, okay? But my God, try and put things in your favor at least. And again, look at higher time frames. Price is a lot cleaner. When we see confirmations of structure, when we see breaks of structure, it's a lot more trustworthy if you're looking on the 4-hour, the daily, and the weekly. And you can then make much better informed decisions on that. Now, I'm not saying you can't drop down onto, say, then the 30-minute or maybe even the 15-minute. They have a place, but the 1 minute, it is just stay the hell away from. Every single person that has come through my mentorship, every single person has come from that 1 minute or 5 minute, and they have all come to the same conclusion, and they've lived through that hardship themselves, have come to the same conclusion that it is horrid, it is noisy, the amount of money they've lost. And if you're watching this, you've probably been through the same thing, okay? So much better on the higher time frames, guys. Make your life easier, get really good on the higher time frames, and then you can bring in time frames like maybe the 15-minute, maybe the 30-minute, okay? Because they do have a place. They do have a place in trading. I'm not crapping on those, but the 1 minute, the 5 minute, the 30 seconds, Us professional retail traders laugh at it basically. All that noise you see on Instagram, all that noise you see on YouTube, we laugh at it because it's so easy to appear that they're profitable, okay? But at the end of the day, they just show flashy numbers in your face. And if you're a novice, or even if you've only been trading a year or two, it's very easy to fall into it and believe that crap, okay? I say to people, trade or call every single trade live, full transparency, fully timestamped. If you ask your favorite 1 minute time frame trader to do that, they'd either ignore you or they'd say no, they wouldn't bother, okay? And there's something to that, okay? So I say, look, unless I can see a proper track record from someone on the 1 minute, and I don't mean over 2 months or 3 months or a couple of payouts or 4 or 5 payouts, I'm talking proper long-term consistency. Because as I said at the start of the video, trading is the infinite game. It's no good as being profitable over a year, but then for the next 2-3 years, it blows up in our face. And that is a problem with lower time frames as well, the 1 minute especially. It can make you think you have an edge because you've had a couple of months of good results, both when forward testing and back testing. But what does that data look like? What does that positive expectancy look like after 18 months, 2 years, 5 years, which in the grand scheme of things is not a long time still, okay? So please take this video, be open to receiving this, because again, the data doesn't lie. We also see in studies around the psychological impact of the 1 minute time frame and lower time frames as well. And as we all know, we hear it banded all the time online, psychology is the thing that holds most traders back. We see in our lower time frame traders or our 1 minute traders, there's a lot more burnout, a lot more decision fatigue. There is a lot more revenge trading, okay? Because they've maybe entered, they've just got stopped, and then price has gone into their direction they intended, and then they've re-entered, and then they've got stopped again. And there's all these tendencies and all these tilting tendencies that come with the 1 minute, the 5 minute, the 30 seconds, okay? Psychology is a huge part of trading, as we all know, and it makes up, and psychology is a huge part of that overall edge of your individual system. And so again, why would you make life up here harder for yourself being down on such lower time frames? And again, if we flip the narrative, we've looked at that sort of negative connotation side, but when we look at more the positive, if you've strung together 5, 6, 7 wins on the bounce, the overconfidence that comes of that, the overzealous that comes of that, we know either end of the spectrum is a very bad place to be in when it comes to trading. You need to be very neutral, grounded, very level-headed. And there's all that noise and excitement and stimulus that comes of the 1 minute. But again, if you zoom yourself out onto those higher time frames, it's a lot less noisy, it's a lot quieter, it's a lot more peaceful, it's a lot easier to be in a very clear, clarified mindset and to make good decisions. There's no perfect decisions, but you can manage risk better. You can have a better stop loss that allows for that noise on the lower time frames. You have a much better stop loss, okay? It's much more forgiving stop loss, and it's much easier then. There's less decisions to make. It's much easier to then let price do its thing. We're pro-trend traders. We trade with the higher time frames with that fundamental and macro bias behind us. So we're putting everything in our favor, and we let price do its thing. We might hold a trade for a day, we might hold a trade for a week. But either or, wouldn't you rather hold a trade for slightly longer with less decisions to make, less emotions, whilst that trade does the heavy lifting for you? Well, you know, one profitable trade on the higher time frames might take you 3 or 4 trades to make on the lower time frames than 1 minute, which is a lot more heavy lifting and a lot more work and a lot more human error. So guys, thank you for watching. Yes, there's a big bias to this video, but for me, I've been on the 1 minutes back in the early days of my journey, okay? I've seen huge success, tangible success. This is the reason I call every single trade live. So it's there, you can see it, it's time-stamped, it can't be faked, it can't be edited. There's a reason I do that, because it proves that the higher timeframes have true longevity in. It proves we can have great winning streaks still. It proves that we can trade in and out of drawdown, which marks a really good sign of a great trader. It's all there for people to see. So thank you for watching as always. Drop a like, drop a comment, and I will see you on the next one.